At a time when property prices are going through the roof, first-time investor Charlie Raymond is part of a new wave of investors taking their first steps on the stock market. She's investing in exchange-traded funds that reflect her passion for the environment.
I would love to leave a better world for our children and for myself in a few years, and investing in companies that take that into consideration is really important.
ETFs are like buying a basket of shares instead of picking individual company stocks. They're usually automatically chosen to match an index like the ASX 200 or a commodity or sector like tech. There are 220 ETFs listed on the ASX. So far, Ms. Raymond's investment has earned her a 15% return.
My advice would be go for it. I think there's never a time like now. I really see ETF as being a safer option than stocks.
In 12 months, the total value of ETFs has jumped by 80% to $100 billion. More than 1.3 million Australians put money in ETFs. That's double the number of investors 2 years ago, and 65% of new investors were millennials.
Last year, we've seen a lot of young investors rush into the share market after the lockdown. So we are calling them the Corona generation of the market.
Dr. Angel Zong warns exchange-traded funds are not without risk. New research from the US has found specialised or thematic ETFs, which follow a particular theme, perform badly compared to ETFs that track an index.
I've seen investors making comments that, I love green stocks, I love green and sustainable or ethical ETFs, so I'm going to buy several. If you invest in a very narrow field, that actually is against the purpose of diversification.
Analyst Elio D'Amato says for index tracking ETFs, there is always the risk of an Armageddon-style market crash.
In fact, the largest ETF in Australia is twice the size of BHP, then that'll create forced selling. Forced selling then inevitably leads to lower prices, and there could be significant carnage on the exchange.
Do you invest in ETFs?
Not me personally. As an active manager, I believe I can get an edge over the broader market.
Unlike other managed funds who invest in ETFs via the stock exchange, they are bought and sold on the market. Many investors are using the online trading platforms offered by the big four banks, but there are other players moving in, some offering no brokerage fees, at least for now. A number of retail and industry superannuation funds now also allow customers to invest in exchange-traded funds. Self-funded retiree Gary Stone is using them to boost his super fund.
That's the idea, is that you become more and more passive as you get older, and as you want to spend your time doing other things.
But he says you must keep your eye on the ball.
It's the age-old way of approaching investments. You should balance that and look at alternatives to that would lessen the fall, if you like, of the stock market index.
He says the trick to better investing, having more than one club in a bag of investments.